Welcome to Commercial Conversations Over Coffee, the show where two college dropouts turned real estate millionaires discuss all aspects of commercial real estate investing. Now, welcome your hosts, Tyler Cobble and apartment guy Bruce Peterson.
Welcome back to another weekly episode of Commercial Conversations Over Coffee, where Bruce and I have some relatively candid conversations about all things investing in commercial real estate. Hope you guys are doing well. Bruce, how you doing this week?
I am doing fantastic. Prepping to head out to Provo in a couple of days, so getting ready for that. You know, my educational website has started rolling now, so we're seeing some traction there. So things are good for me.
Nice.
How
I know
about
you've
you?
been working on that. I know you've been working on that for quite a bit. I mean, give us the latest. What's going on with the website?
So, it's a long process, right, to get a website built from scratch when you don't know how to do it yourself. I hired somebody that's really good at it. But what we've done is we've built our own infrastructure to, create kind of like a Udemy or a Kajabi, where not only are we going to have our own stuff on the website, but we're going to open up our platform to other teachers, right? Just like they do, but we've got things in mind that they aren't providing right now to their teachers, to their instructors. So we're working on that right now, building out the infrastructure. But right now we've got a full syndication course. I wrote the book on syndicating, but I go into a lot more detail because in the book you can't cover everything. It's just not possible. So in the course, we cover pretty much everything. You got to remember too that my thought on syndicating is you got to syndicating because you're looking for a way to advance your real estate investing business. So I don't teach you how to underwrite necessarily, not necessarily, I don't at all, because the assumption is you already know how to do an underwriting. So I'm just trying to focus on the actual process and the thought behind it and all that. So we've got that. And we've also got a full course on how to be an effective, efficient, and safe passive investor or limited partner in somebody else's deal. You know, the things to watch for, the things to understand, what a lot of the verbiage is, and how to know what you're getting yourself into. So far, so good. We're off. This is our first week and a half, and we've already sold 10 to 20 courses. So things are going well.
That's awesome, man. Yeah, we're definitely going to have a conversation sometime about safely investing as an LP. You know, how to vet the GP, right? Because, just because somebody can bring an offering to market doesn't necessarily mean that they probably should be bringing an offering to market. And we also we've been talking about this for a few weeks now. We've got to go live and talk about your underwriting software and show people how you underwrite multifamily deals because once I saw how you did that, I mean, it completely changed my perspective. I mean, it's actually pretty amazing how quickly you can underwrite a deal once you kind of understand how to do it and have the right software. And I think that you've really done that with what you're offering.
Right. And our approach, everyone knows my background by this time, I'm sure, or most people, that, I'm not an Ivy League, educated guy. I'm a guy that went out there, read books, went to meetings, went to meetups, joined a real estate group, and I learned it organically. I didn't sit in some master's degree program, and there's nothing wrong with that at all. But I'm trying to provide the name of my educational platform is STREETVERSITY, all one word, because that's what it is. I kind of sort of learned it on the streets, if you will, as opposed to learning it in a very formal environment. So my underwriting spreadsheet is a spreadsheet that I think is very intuitive, and it's something that without having the advanced degrees, I kind of pieced together over 10 years of working on it, reworking it, manipulating it, fine tuning it, and tweaking it, that it really, really works. There's some things that I'm still going to be working on from here, but yeah, it's designed to be for people that don't have that degree, don't have that high level understanding of capital markets, maybe of the way all the financing works necessarily. So it's an approachable way for people to underwrite, and I don't over geek it as an engineer because that's just not who I am.
That's exactly it. I mean, it's not over-engineered, right? I mean, the overwhelming majority of commercial real estate investors, brokers, developers that I run into on a day-to-day basis, they didn't go to college for commercial real estate. They just fell into it in some way or another. And so I think that, offering courses like that is a great way for people to very quickly download the amount of information and knowledge that they need and get to work instead of spending 4 years wasting your time. So I love that you're doing that. There's not a whole lot of education out there for commercial and multifamily real estate that is worth it. And, obviously coming from you, that's going to be a pretty significant course to take.
Right. And, one other thing I want to hit on before we move on that, you come to learn as you see many, many, many spreadsheets over the years, or actually a decade for me now, that it's like a thumbprint. It's like a fingerprint. Everybody's spreadsheet is so wildly different than the next person because most people aren't good teachers by nature. And if you're not a good teacher by nature, I firmly believe you have a hard time building an underwriting spreadsheet or any kind of spreadsheet about anything with calculations, with numbers, in a way that people can just understand intuitively without you having to hold their hand for 8 hours to describe and explain their damn spreadsheet. It works for them. They know exactly what everything means, but they don't have the ability to communicate that to a layman. And that's what I'm very proud of, that I've been able to do that. I feel that's the feedback I've gotten from others that I've shared this with, and I've sold a few of them. But yeah, I mean, people will share their underwriting and say, hey, Bruce, will you do this deal with me? Well, send me your underwriting. Let's look at it. Like, what is this? Well, how do you not understand? I'm not in your brain. You know what this is. But to me, we're going to have to sit here for an hour or two trying to explain to me what all these things mean in your spreadsheet, because it's not self-explanatory and it's not intuitive. So that's been the goal for me the whole time.
Yeah, I mean, that's absolutely right. I think that's a great way to look at it. I think that's great. Well, so today we are diving into working with commercial and multifamily real estate brokers. I get asked all the time, as I'm sure you do, how do you get in with the brokers? How do you start seeing the good deals? How do you get to a point where the brokers, honestly, like in multifamily, it's way more so than commercial, but how do you get to a point where the brokers trust you enough to bring you the deals? Because multifamily brokers especially have a list of 3 to 5 guys that they know, like, and trust, and those are the 3 to 5 guys that they call. And so you almost have to court these multifamily brokers. So I figured we would dive in today and just chat about, one, how to start building those relationships, 2, why you should be building those relationships, and 3, the benefits of doing so. So Bruce, I mean, obviously coming from a multifamily background, you and I actually have very different backgrounds, right? Like, you always started off as an investor. I have the flip side where I started off as a broker. So, I'm excited for the different viewpoints that we're going to bring to this conversation. But let's start off with, with your side of things. I mean, how did you just start buying multifamily and building relationships with brokers?
Well, the first thing I did, remember, I beat this to death, I know, but I worked with a coach that was very connected in the industry. So there's a lot of benefits to a coach, not just teaching you the process, not teaching you how to underwrite, but they're also going to come with a lot of connection, most likely, for you that you can leverage. Most good coaches or mentors, they will open their Rolodex to you, so to speak, right? We don't work with Rolodexes anymore, but they're going to give you their contact list. So that was hugely valuable for me that they made that available to me. But outside of just making it available, okay, it's one thing that my coach said, hey, this is Bruce. I'm working with him, teaching him the ropes. I'd like for you guys to meet. Well, but now I still have to figure out how to cultivate that relationship in a way that they're going to take me serious. So it's about, figuring out ways I can get face to face with these people. I almost said guys, it's male or female, but maybe unfortunately, even it's almost all men. This industry is almost all men. There are some women doing amazing things as syndicators, as investors, as coaches, mentors, brokers. There are some, but there's just not very many. And I think that's a huge miss. I couldn't be, I'm on a huge tangent here, but I couldn't be happier that my wife is completely involved in this with me, because she brings such a different sensibility to this than I do. And a lot of things she's better at than I am. So I hope more and more women get involved. But again, you gotta find a way to strike up a relationship and a rapport with these people. And I think it's best done in person. And I know that's tough right now because of COVID. But many of the brokers are still conducting property tours and they're out there. But I know a lot of people listening might not be comfortable doing that themselves. And that's totally understandable and okay. But as soon as you do feel comfortable in getting out face to face with people, That's how you're going to build a better, stronger relationship. So just you got to get to know them, and the more they get to know you, the more they like and trust you, like you said, the more likely they are to take you serious and start sending deals your way.
Yeah, I think that's fascinating. I was actually looking at the statistics for my YouTube channel, the Tyler Cobble YouTube channel, where I'm sharing, educational videos on how to invest in commercial real estate every week. And at this point, I'm about to get monetized. So I've had 4,000 watch hours. And so you think about the amount of data that comes out of that. I was looking at it yesterday, 90.1% male audience, which is fascinating,
Oh,
right?
that's
90.1%.
huge.
Isn't that crazy?
Huge, and maybe not a great way. I mean, it's great that you got all these
Right.
eyeballs, but how do we get women involved? Maybe women just
Exactly.
don't care, and we can't change that. I don't know, but I don't think that's the case. It's like STEM, right? Science, technology, engineering, and math, right? Girls and women are turned off from that at a very early age because societal pressures drive them out of something they had an incredible inquisitive nature about. How do we get women involved? I don't know the answer to that. I'm a freaking guy, but yeah,
Yeah.
it is weird because I have two kids. I have two daughters, and I have a niece, and on some weird level, it hurts that this is such a great way for people to provide for them and themselves and their families, but women aren't getting exposed to it. They aren't being nurtured. They aren't being courted. And I don't, like I said, I don't know how to change that. If anybody listening has ideas, hell, share that shit with me. But 91%, good God, that's huge.
Yeah. I mean, it was staggering to see that because when I first got started, I was like, okay, maybe there's just not enough data for YouTube to give a good recommendation of what the audience is. And no, it's we're almost a year into the channel. It's 90% men, and so I think that it's probably a factor of what you're exposed to as a kid, who your role models are, and you know, from the brokerage perspective, I've never had a female apply. So it's not even that we're not, so I mean, of course, my team is all men, which is not something that's ideal in my opinion, but you know, how do you get women to apply? Right? I mean, we don't have an anti-women work environment. We don't have anything that puts off like we only want men on the team. It's just I've never had a single woman apply to be a commercial real estate broker with me. So anyway,
Yeah,
we're
I'm
on
looking
a
at my demographics right now for apartmentguy.com, and I got very lucky. I don't know how it's happening, but my split is 54% male and 46% female. My
wow.
Instagram following is about 60-40 men. Um, so I'm not as tilted as I thought I was going to be, but yeah, we just recently hired a new regional manager for our management company in Austin, Texas. And it was so important. I'm not going to hire somebody to fill a quota, to fill some. I want the right person, but I so
Right.
desperately wanted a female to be the regional manager if I could find somebody qualified. Because what has happened in the apartment industry, almost without exception, the lead maintenance person is a guy. The property manager is almost without exception a female. Now there might be 10% male, maybe 20% male, but it's overwhelmingly female. But then when you get into executive level, C-suite level, it's almost always men. So all the regional managers are almost always men. And that was such a huge disconnect for me that I want more men to be property managers for me, but I also want more women to be regional managers for me. So we did find one, and she's fantastic. She's incredibly good. She's very detail oriented. But again, just to maybe wrap this up, again, I got us off on a weird topic here. But I'm very happy to have provided a very high quality woman, a great paying job, and help drive my company forward.
Yeah, that's great, man. I mean, that's, have, strive to have an impact where you can. Right. And you had the opportunity and she was a fit for the job. And I think that's great. But yeah, quite a tangent. So welcome to Commercial Conversations Over Coffee, right? Where Bruce and I go off on tangents all the time.
But honestly, before we keep going, I think that's the beauty of our concept. We have an hour and a half to talk. And if we go off on some other tangents that we feel are important to talk about, or if somebody has a question for us that's fine. We have the time to dive into that stuff. I don't have a 20-minute, podcast that I have a list of questions that I got to check off that, I asked my questions. Okay, time to wrap it up. That's not what we're doing here. So I really like this part of our concept.
Yeah, I completely agree. I mean, that was the impetus for our starting the podcast in the first place, right? Is that there was no podcast like this out there, and so I think that, I mean, how many commercial real estate podcasts are going to be having a conversation about how few women there are in the in that, in this sector, right? So I think that's pretty cool, because most of the time you're not just going to say, hey, let's talk about the lack of women in commercial real estate as an episode, and I think that we've definitely made strides over the last, since I've been involved in 7 years, the amount of women that I've seen working in Nashville, at least, has significantly increased, especially on younger women, millennials that are getting into the business, which is really exciting to see. Because that's the next big wave in commercial real estate, or millennials, right? So it's been pretty nice to watch that.
So what is a millennial?
What is a millennial?
Yep.
Oh, where was the cutoff? Like 98?
Well, see, and that's the reason I asked that question, is I think that has become such a ubiquitous term for young person. That's all it means. Oh, millennial. That means an 18-year-old, a 20. No. That's not a millennial. Millennials, oh, yeah. I don't know the exact cutoff. Maybe it is 98. So 98 would be a 23-year-old potentially. So in my brain, it's 25 to 35, maybe even up to 40. And then Gen Z is, the 18 to 25-year-old, I think.
Yeah, I think it's closer to 26 to 39 right now.
Okay.
I think that's where it is, because I read something the other day where the first millennials are about to start turning 40, which is kind of crazy to think about, because you're right. Like, everybody in society is always talking about millennials as if that's just, the young generation is millennials, 18 to 24. But that's just not true.
It becomes synonymous with young people. And I want to make sure, I try to keep that straight in my head, and make sure everybody listening too that knows that there is Gen Z too. So millennial doesn't just mean young person. So anyways.
That's right. Well, speaking of millennials and young people, when you're building a relationship with a commercial or multifamily real estate brokerage and you don't have a track record, that is my number one tip for anybody that's trying to get going. Usually these brokers work on teams, right? So you've got your senior brokers, junior brokers, and then sometimes even analysts or interns. And the best way to start getting in with those guys is to find the younger broker on the team and start your relationship with them. If you don't have a track record, right? Because they are actively looking to build their roster, whereas the senior brokers kind of have their 3 to 5 guys, right? That they call. And so if you can get in with the younger guy and he has a little bit of pull with the team and he can at least throw your name in the hat, that can make a big difference. I think, Bruce, before we dive into commercial, because obviously I'm going to have, some perspective as both an investor, developer, and a broker, let's talk about the process of working with a broker in multifamily. So let's say that before you bought your 48 unit, you're relatively knowledgeable about multifamily, but you've never done your first deal. How did you start? How did you find the right brokers to talk to? What kind of conversations did you have with them? How'd you get started in it?
Well, again, I was fortunate to have a really good mentor and coach that was very connected. So she kind of helped pave that. Hey, I said she. That's right. On that earlier conversation, there are some phenomenal women in this space, but she was incredibly good. And she was very well connected. So if you don't have that, or your mentor maybe isn't as well connected, because maybe they're not even in the same state as you, and that can work. Absolutely, that can work. So I think what you need to do is, first of all, get on everybody's mailing list that you can find. So just do a Google search for your local area. Commercial broker Austin, commercial broker Central Texas, commercial broker Tennessee or Nashville, or wherever you happen to be. There's going to be all kinds of people that come up. When you're first getting started, like you said, if you go reach out to the really, really large guys, the Berkadias, the HFF, JLLs, Walker Dunlop of the world, it's not easy to get on their radar, but many of them do have junior brokers, and maybe that's a weird word, junior, but less experienced brokers that are trying to establish themselves, build their book, their database of qualified investors. So you might be kind of farmed out to those people, but I think you need to go out and get on everybody's mailing list. Almost every All the big brokerages have this. They'll have a mailing list that they will fill your inbox with the types of properties you have filtered through and said, this is what I'm looking for from an attribute standpoint. So get on everybody's brokerage website you can on their email list and start fielding those emails. Once you start getting those, what I think you should do, and I say this on stage and in rooms all the time, and before I say it, I always ask the room, are there any brokers in the house? And always there's going to be some people say, okay, you're going to hate hearing me say this. You might want to close your ears. I don't know. Get up, walk out of the room, and come back in a few minutes. But it's just reality. I'm talking to people that are trying to establish themselves in this market, in this industry. So once you get some deal flow coming to you, let's say working with your coach or somebody experienced in your corner, you've decided that, your first deal is going to be maybe a 20 to 40 unit property built in the 80s or 90s. You want it in this neighborhood or that neighborhood. You want pitched roofs. You dial in what it is you're looking for. As you start seeing things come into your mailbox that are at least close to your parameters, they don't have to be exact, but just anything that you think this broker will take you seriously on as a first-time investor. Don't ask them to show you around a 30-story, 300-unit property in the central business district, downtown LA or New York or Austin or Nashville. They're not going to take you serious. Find the smaller properties that there's a reasonable chance that you would be able to take something down like that in their mind. Go see every one of them. But, well, Bruce, this one doesn't make sense. The returns aren't good. I don't care. It doesn't matter. Your job is to put your face in front of these brokers. They've got to get to know you on a personal level because you're going to have conversations there. So let's say you find a 40-unit property that comes into your email box and you think, well, I underwrite it. It doesn't make any sense. Doesn't matter. If you're looking for something between 20 and 60 units, hey, it's right there. They will take you serious on a 40-unit probably. So you've got to schedule a time to go do an in-person tour with them. And as you're walking around, you're listening, you're being respectful, you're not being difficult. But at the end, Fred, this really isn't what I'm looking for. It's this or it's that, it's missing this or that. So they're probably going to ask you, well, what is it you're looking for? And then you start talking, you develop a relationship and a conversation. So now maybe 3, 4, 5, 6 months down the road, they'll have exactly what it is you're looking for. And it comes to them and they're like, oh, hey, this is exactly what Bruce said he was looking for. Because you have that relationship with them. It's early in the relationship, but you still have put yourself in front of them. They know, oh, based on a conversation we had, let's send that to Bruce. So that's what I did. I went and toured everything that I thought they would take me serious to look at, whether I thought it made any sense or not. I did not care. I needed FaceTime with these people. And that's exactly what I did. And it paid off.
I think there are some major takeaways from that. I mean, you're going out and you're being very specific in the kind of property that you want. It's not just hey, I'll look at any multifamily you got, right? I mean, you're not going to stand out to a broker. They're looking at all these different deals, and they've got guys like Bruce that are coming and going, I want something between 20 and 60 units that's Class C, built between 1970 and 1980. Well, if they come across that product, Bruce is going to be the first guy that they think of. The guy that comes in and says, oh, I'm willing to take anything you got, I want to look at everything, it's just not going to happen. I think the other thing to take away from that, you're going and touring properties, whether you think it's a fit or not. One, that's a great way to build a relationship with a broker because you get more face-to-face time. Two, that's a great way for you as an investor to start learning your market better and seeing what's out there and getting a better idea of the product in the market. But three, you get to give them feedback on what you do or don't like about the property so that they can continue to learn what they should and shouldn't be bringing to you, rather. I mean, that's there are far too many investors that send an email. I mean, because I get these all the time. They'll just send an email like, hey, I'm looking for this. And then they never follow up. They never go on any of the tours of the properties that I show them that could be a fit. And we just never call them back. I mean, there's no point, right? I mean, they don't seem serious to us. So why should we take them seriously?
Right. And you're never going to become a real estate investor by studying all day, every day, and only doing spreadsheets and only reading books and only watching podcasts or listening to podcasts. You've got to get out and take steps. I think a lot of people, there's a guy that I'm working with right now, and and I talked about this last time, I think a little bit too, that Bruce, I get stuck in the research and the studying of it because I enjoy it so much, and I think a lot of people do. They get scared to take a step. I'm scared to go on those first tours with these guys because I'm going to look like an idiot because I don't know what I'm doing. It's okay. The first time you did anything, you didn't do it right, almost without exception, or at least you didn't do it well. Right? Maybe you did it kind of right, but you didn't do it well. You weren't polished, but there's only one way to get there. It's called practice. If you don't practice, you can't get better. Reading a freaking book is not going to make you better. It's going to give you the base knowledge to get out there and get punched in the face every once in a while, right? What is it? Mike Tyson says, everybody's got a plan until I hit them in the face. You're going to get hit in the face. You're going to screw up a conversation at the beginning. It's okay. They've dealt with first-time buyers before. They understand what you're dealing with and what you're going through. But if you don't take that first 2 or 3 or 4 tours, make a few mistakes, learn from them, and get better, it's just not going to work. So there's part of that too, is putting your learning into practice, which will make you better.
Yeah, and two, brokers appreciate that you're going on tours with them, right? Because that gives them the opportunity to go back to their seller and give them feedback and show activity, right? I mean, that's one of the best things that a broker can do when they've got a property listed is show the landlord or show the seller that people are touring the property, but they're not necessarily putting offers in. Okay, well then what's wrong with it, right? So it gives them a list of all the feedback. Okay, well everybody is saying that they don't like, the fact that, I don't know, the rental units are only making $600 a month and they really need to be making $800, so the cap rate's just too high or too low. And the value's too high, right? And that gives you, as the broker, the opportunity to go back to the seller and say, look, I think we need to lower our price. Here's where all of the feedback is coming in. So even if you're not, incredibly intentionally serious about buying that property, it helps a broker out just to go on the tours.
Right. And, some of those things that might be feedback, maybe it's across the street from a cemetery, because I toured one like that one time, and that does not bother me at all. I don't care. You got quiet neighbors. That's what I say. Yeah. Dead people don't talk. Right. So that's never bothered me, but I know it does bother, it does bother a lot of people, but that's that feedback that, it helps the seller calibrate properly to go, okay, you told me I need to sell it for 10 and I told you to put it on the market for 15 million. Well, the feedback is saying it's overpriced for these reasons. So yeah, I agree with that completely. And that's where your vantage point on this podcast is huge, because you're the broker on the other end, so it's helping you a lot too.
Yeah. So, I mean, coming from the broker's perspective, the investors that I take deals to are the ones that, they have a track record typically, right? Because think about it from the broker's perspective. I only get paid when I close a successful deal. I only get the next deal if the buyer I bring to that seller closes and it's a successful, non-stressful, smooth transaction, right? So think about that. I mean, most people who are selling commercial property or multifamily, property, they have multiple assets. And I, as a broker, want to continue to have a strong relationship with that seller so that I can help them with their next project. If I bring in a buyer, and I had this happen once. Let's talk about this. So one of the first multifamily buyers I represented, and after this, I actually decided we weren't going to do multifamily anymore as a brokerage because one, I just don't specialize in that. And two, there are groups that very heavily specialize in that. And so, one, the competition's too high, and I can't serve my clients well. So that's why we actually stopped offering that. But one of the guys that I represented, typically in multifamily brokerage, buyer representation doesn't exist, but it can on sub 80 unit properties, sub 60 unit properties. Typically, those sellers, those brokers are willing to work with a buyer representative. So this is a little, 30 or 40 unit deal north of Nashville. And the guy that I brought, he had a residential track record. He didn't have a multifamily track record. And he talked a big game, and I'd met him through my network. And so, I figured, he was a good buyer. The seller's broker had known him through the same network, through, an investors group that we were in. And so we both were kind of like, okay, cool. Well, let's get this rolling. Well, right off the bat, I should have known that this was going to happen. The buyer contacted the seller's broker without telling him that I was representing him in this deal. And that is a huge no-no. I mean, you never, ever do that, because the seller's broker automatically thinks, okay, I'm getting both sides of the deal and I'm going to roll with this. Well, you bring a broker in after the fact and it looks like you're trying to go around him. It didn't look good on me when I had to come and tell him, hey, I actually do represent this buyer. And it didn't look good on the buyer. The seller's broker was already upset. Anyway, we ended up getting under contract and he started doing his due diligence. It was going to be a great deal. And then it came to literally the week before closing, and the buyer decided to tell us that he couldn't close on the deal because he couldn't get his equity and his debt together the week before closing. And so, of course, the seller's broker was furious with us. He was mad at me. It looked bad on me because I had brought this guy to the table. I had vetted him, but it still didn't make a difference. And so because of that, it hurt my relationship with that selling broker, right? Because neither of us got a commission. In fact, his seller was so mad that he fired him as the selling broker. And it was not a good scenario for anyone. And so, that is why brokers are so picky about who they work with. And they have to be. I mean, they don't get paid unless a deal closes. You don't want to have a scenario like what happened to me. That hasn't happened since.
Right. Well, and it goes a little deeper than some of that stuff too. Think about, not only did he lose that guy as a client and he wasted a lot of time, that brokerage firm pulled together marketing material, did a lot of demographic studies. They put a lot of time and money into that, right? It's very common almost every single time. They put thousands and thousands of dollars into creating all the brochures, all the marketing material. There's a lot of time spent on phones and emails with potential buyers that, for them to not get anything out of it, they spend a lot of money and time and resources at their brokerage to not have this thing close. And so, yeah, that's going to start burning your name quickly. So, I just sold a 250 unit property in San Antonio. I first went under contract about a year and a half ago. Same thing happened. I'm talking with my broker and he's become a friend and he's really good. And he said, Bruce, look, there's a little more risk with this guy, but he is $1 million over the other guy. I'm like, well, what do you think? He said, well, he's closed a lot of deals before. He can be a little high maintenance, but he's always closed and we've worked with him before. He's just not always the easiest to work with. I was like, okay, I trust what you're saying. So we went with this guy and sure enough, he flaked, right? He extended like 4 or 5 times. And
wow,
he was such a good buyer that, such a good price that we kept extending because I don't want to have to relist the damn thing because that's going to take another 3 to 4 months to run the entire process and sell.
And it would look bad, right? Like, why did that guy drop out? I could figure out how
to close with this guy. So we kept letting him extend. And then at the very end, he just pulled the plug and he couldn't close. He couldn't get his equity together. Like you said, it's a $24 million project. It's a big deal. And he couldn't put it together at the end. So at the end of it all, I got his $250,000 in earnest money. So, yay, but I wanted to sell the property. That was the goal. So then the second time we put it up for sale about 6 to 9 months later, the best buyer on paper was a good friend of mine. And he brought this guy to me. I said, hey, I know that guy very well. He's actually a friend. We've been partners on other things in the past. I'm always leery about going into business transactions with friends or family because it can get a little squirrely. And if it does get a little squirrely, it's not somebody I can just walk away from. I'm still going to run into this person and it can put a strain on a friendship or a business relationship. But we decided to go forward with it. It worked out well. He closed on time. He did not hound me and nickel and dime me and push back and try to retrade, which means renegotiate the deal. He didn't ask for a price break. It went very, very well. I will sell to that guy again. And I tell all my other friends, if you ever want to sell to this guy, if he ever gets in the mix, dude, I can't speak highly enough about the process that I went through with him. So that is hugely important. Make yourself the best, lowest maintenance buyer you can possibly be. My goal is to never renegotiate. Once I go under contract to buy somebody's property, unless what I find was unforeseeable and it's so bad, the deal will fall apart and I will lose money. Outside of things that bad, I'm not going to renegotiate you because I know there's stuff that after I get under contract, there's things that I didn't think were there as problems that I'm going to find when I start to research this deal as I dig into it and do all my inspections. So knowing that, I'm always going to bring in maybe as much as double the rehab budget I think I need because I know there's going to be things that I'm going to find that I didn't anticipate. So now I've got this huge cushion that I can absorb a lot of unforeseen problems that come up with the property. Maybe the foundation of one of the buildings is worse than I thought. Maybe the roofs are in worse shape than I could tell from the ground, or even a drone flyover. So I have all kinds of contingency money there because, again, the last thing I want to do is say, hey, I still want the deal, but I got to, knock $400,000 off the sales price or I'm not going to buy it. Well, that creates heartburn for the seller and the seller's broker. I've never, ever done that. I've always closed at my original price. I've never retraded. Now, I will retrade if it absolutely has to be done, but now people know Bruce doesn't retrade. Bruce closes. He's able to pull his money together every time, and he doesn't nickel and dime us, and he doesn't renegotiate. So I get deals sent to me that I would never heard of otherwise, and I've been awarded deals where I wasn't the highest bidder for that reason. They know I'm going to close, and they know I'm going to be very easy to work with.
Yeah, I mean, having a reputation as an investor to not be the investor that ever retrades is massive. I mean, I subscribe to that same philosophy, right? I mean, right? Coming from a brokerage perspective, I have to. I mean, I know how the game works. The only time that I've ever retraded a property was when we got the inspection report back and there was so much wrong that I had to go to the seller and say, look, I'm paying top dollar for this property and I cannot close on this unless these issues are fixed. And so I actually worked through that with the seller. They were totally understanding. They actually knew some of those problems existed, and we got it worked out. And, I didn't try to beat them up. I didn't try to extend it. I didn't try to, significantly reduce the price. I just said, look, I just want these items fixed. You can fix them or we can get a discount and I'll fix them. And so, it worked out really well. There's a buyer in this market in Nashville that I don't take deals to anymore because he has a reputation. Every damn time we put a deal under contract with him, he comes back and tries to retrade 2 or 3 times. And it's always, the 24 hours before due diligence ends, or 48 hours before closing, or it's all like he intentionally does it, and that pisses me off, right? Because then I have to go back to my seller and tell them what's going on. And so it just got to the point where I stopped bringing him deals because it's just not worth going through the process. It's like Bruce was saying, it's better for the broker to recommend, like, look, I know Bruce's offer isn't the highest on the table, but I know that he will close at that price. This other guy, I've never really closed a deal with him. He's a higher price, but he there's a good chance he's going to come in and retrade you. And you can always kind of tell when a group is going to come in and retrade.
Yeah. So again, that's huge because so many people are wired in a way that says, I have to win the negotiation. And that means I'm going to, very often people will say, okay, it's offered for sale at 24 million. I'm going to offer 26. There's no way I will not get this deal. And they know on the 29th day of a 30-day feasibility or due diligence, I'm going to come back and retrade for 2 million because I'm going to get back down to the 24 million. But this way I at least get it under contract. People start to put that shit together real quick. And like you said, you don't fit anything into this guy anymore. The buyers that he's done that to, the sellers that he's done that to now, even if you as a broker bring him again that seller will never let you bring him that buyer again. So when you think I have to win the negotiation or I have to get something from, you win if you get his property. That's it. Don't be the dick that, pulls all this shady crap because you piss everybody off and nobody wants to deal with you anymore. Sorry, I said a really bad word there, but I don't usually say male or female anatomy kind of words. But man, it infuriates me. And people are so short-sighted. They think, "Oh, I have to win the negotiation." No, you don't. Let them think they won the negotiation. Because as long as the deal still works, that's all that matters. And if they think they won the negotiation, they got something over on you, if my numbers still work, I don't care. I want them to think that. Because the next time they sell something, go, "Oh, give it to Bruce. I can get over on him." Fine, think I'm an idiot. I don't care. I want to buy your property. And as long as the price that I get it for is a price that works for me and my investors, that's all that really matters. And then a second thing, we're talking about renegotiating in this talk, that I have a lot of people take things very personal. They'll get into a deal and they'll say, "Okay, well, I'm going through this. I've got 30 days to dig through everything with a fine tooth comb, do all the on-site inspections, do all the lease file audits, dig through all of their financials, make sure everything looks good." And every once in a while, you're going to find a seller that has a lot of inaccuracies or inconsistencies in their reporting, or they just absolutely lied and falsified financials. It happens. And a lot of people get really pissy and bent out of shape. "Oh, you know what? If it doesn't affect the deal and they lied about something that was $20,000, dude, $20,000 is a lot. You say that everybody on your property is paying $1,000 a month in rent, and you're reporting, and then I go in and look at the leases as I'm doing my audit, considering buying your property, and I see that the legal document that your tenant signed said they're only paying $900. Well, you lied in your financials. I'm going by the legal document that says they're only paying $900. You say they're paying $1,000, and let's say that's a $20,000 difference. Now I could get really pissy, take it very personal, as a personal affront to me. How dare you know what? $20,000 on a $25 million deal, that shit doesn't matter. It is not going to make any difference in my return to my investors. I don't care. My attorney is always looking out for my best interest and always trying to protect. "Bruce, you got to push." Nope, don't push back. Yes, I'm pissed that they lied to me. So now I know to be on guard on everything, because I know these jerks lie, but the deal still works even with that $20,000 lie. And as a human being, that's really, really hard to do, because you've been lied to, you feel disrespected, whatever you feel. Again, the goal is to get that property into your portfolio that you can start making money on, your investors can start making money on. And again, if they think, "I lied and Bruce didn't catch it, he's an idiot," I sell him the next one. Yay, sell me the next one. Now, if that lie was a $2 million lie and it's a $10 million project, okay, now I have a serious problem. I'm probably never going to litigate or anything like that, but I am going to get out of that deal. I'm going to walk away if they won't renegotiate down that $2 million that they misled me about, or sometimes just flat out lie. So again, don't get into a pissing match. Don't take things personal. This is business. That's all it is. You win when you get the property.
Yeah, I mean, I like that perspective. You win if you get the property. I mean, that's been your catchphrase since like the first day that I met you, and it's so true, right? I mean, you win when you get the property because you have a successful close, right? Like you get to go and manage the property and run the investment with your investors. I mean, that's really the best case scenario, as long as the deal still makes sense.
Yep. Now, remember, we talked about this when we first kicked off this podcast. See, if you notice, most of my answers are not going to be like ticking boxes and, these are all the mechanics. I want to talk about mindset a lot, because I think that is, I would say 50 to 60% of this. Yes, you have to make sure the numbers pencil out. You got to make sure the deal makes financial sense. But this is a psychological game. It really is. It's all about relationships, personalities, your character, how you conduct yourself in a business environment, in a setting. Are you a loose cannon? Are you a hothead? Did you lie? Right? So that's what most of it is for me. Everybody knows how to underwrite. Everybody knows what deal makes sense. Everybody knows what broker to go get on their mailing list for. The way you differentiate yourself is your mindset, the way you approach this professionally and with respect to the other party. So, again, that's a lot of what I'm going to be talking about, because I don't think a lot of people talk enough about this stuff.
No, of course not. So when you're in the market to buy a property, how do you cultivate those relationships with brokers? And how do you stay top of mind?
Well, that's it. I just go out and tour everything I can tour with them. I'll be honest. I don't do a lot of, hey, let me go buy you coffee. Let me go buy you lunch. Let me go buy you dinner. They don't give a shit about that. They make tons of money. I promise you, if you're dealing with a successful broker, I don't know this to be a fact, but I'm pretty sure it's true. They probably make at least 500,000, and many of them make over $1 million a year. This is a big boy game. There's a lot of money at stake here and a lot of money in play. So if you think I'm going to take you to a $50 lunch and they don't care. They make a lot of money. Their time is the most valuable thing they have. They don't want to go have lunch with you. Now, sometimes, well, it's often the case, once you prove yourself in a submarket, brokers will want to take you to lunch because they think the psychology of that, it actually does work with a buyer a lot of times because it makes the buyer feel special, heard, hey, they think I'm a big deal. They're going to take me to lunch, when I close a deal. All my brokers know that I'm a bourbon dude. They'll send me an $80 to $150 bottle of bourbon every time. So it works going the other way, I firmly believe, as a broker. But doing it to the broker doesn't have time to have lunch and coffee with everybody. So I really don't do that myself. Again, I just want to see them in a professional environment and be respectful of their time. Do everything I can to show them that I'm serious, to show them my track record. And, if you don't have a track record and you don't have a direct in through my broker slash mentor and coach, what I think a lot of people should consider, and I think a lot of people are starting to do this now, you need to align yourself in your general partnership, in your GP. Bring somebody into the deal with you that has those relationships or has that track record. Maybe they've done 3, 4, 5 deals, and you have to give them an outsized portion of the deal to get them to sign on with you. Dude, it's worth it. Let's say your GP, you get an 80-20 split, right? So the general partnership gets 20% of the deal as their promote, and you don't have any track record. You have to bring somebody in that does have this track record that's going to get you taken seriously, that's going to bolster your standing, that might help you with the balance sheet to get the loan. But they want 50% of your promote, or maybe they want 75% of your promote. As long as you don't go hungry because you had to give them too much. And if that's the case, I don't think you should be doing these deals anyways. But give away a ton of your promote on that first deal or two if it means getting somebody on your team that legitimizes yourself, right? Your first deal, Brandon Turner, Bigger Pockets is big on this. Your first deal is not to make money. Your first deal is to learn the process, run a successful deal for your investors, and learn from that first deal. So bring somebody in that has that track record and has those connections if you can. It's huge.
Yeah, that goes back to, what we were talking about last episode or a couple of episodes ago, finding a mentor and how much that can really impact your, entrance into the world of commercial and multifamily real estate. It's other than this podcast and a handful of others, there's not a whole lot of education out there on how to actually go about and do these deals. And so honestly, still right now, the best way to do that is to go find somebody that is incredibly successful at what you want to do and follow them. Go work for them, learn from them for a few years, then go off and do your own deals. It's the best way to do it without losing a lot of money, because in this business, if you can somehow convince a bunch of investors to invest with you, even though you've never done a deal, that is one of the worst risks that you could take, because now you're going out and you're buying, a $24 million property with other people's money, and you have no idea what you're really doing. You've just listened to it a couple of times on a podcast and read a book. And it is night and day difference to actually operating a deal.
Yeah, it is. And again, that's why we talk all the time about just get out there and take action, move forward. You have to have forward momentum. All the learning in the world is not going to do you any good. You got to get out there, stub your toe a few times and learn it. So yeah, we beat this to death, but, and again, I'm not looking to be anybody's mentor. So please don't anybody take this as a pitch, as a sales thing. I don't want to be your mentor. I don't have time to be your mentor, but damn it, you need a mentor. You need somebody in your corner that's dealt with it. You read my book, you listen to our podcast, you read Tyler's book. there's all kinds of stuff that's going to happen that is not covered in the book. And if you don't have somebody that you could turn to go, whoa, this wasn't in the literature I read or the podcast I listened to, what do I do? If you don't have somebody to do that with, dude, you're gonna get yourself in a lot of trouble.
Yeah, like serious trouble. Losing investors and possibly getting reported to the SEC kind of trouble. And that's not the kind of trouble you ever want to find yourself in.
Right.
So, Bruce, let's dive into some anecdotes. I mean, what is the best thing that's ever happened to you from having a good relationship with a broker, or for having a strong reputation with a broker?
Well, it's, kind of what we've already hit on. It's that I get deals sent to me that a lot of people don't ever, they're never privy to. And then even more importantly, they will go to bat for me. Yes, they have a fiduciary duty to their seller without question, to their client. I'm not their client at all. Like you said, it's very rare to find a buyer's representative in the brokerage world for commercial real estate. So they are working for the seller, but they've had transactions with me in the past and they know I'm a good buyer. So they will literally go to bat for me because they know if we have a successful close with the buyer, their seller is super, super happy. So because of the way I conduct myself, that's the thing, that I get deals sent to me. And oftentimes I'm not even the highest bid. So they'll say, look, I know Fred down the street is going to give you $1 million more. Bruce is giving you a deal that actually works for you. And it's kind of close to what we even talked about when we did, when we struck up our relationship. But if Bruce is going to close, this other guy, he might close. He probably will close, but he might retrade you too. And Bruce has a history of not retrading. Now, I can't guarantee Bruce won't retrade because maybe he finds something that he has to retrade. But all the deals I've done with Bruce, he has never retraded. So that's the big anecdote, right? That's the big takeaway. That's how it's benefited me tremendously.
Yeah, we deal with that consistently. I mean, I think, coming from the broker's side, whenever I get a call from a seller, hey, we want to list this property, come over here and get to work on it. There's a couple of phone calls that I'll make to, developers and investors that I have worked with in the past before anybody else ever hears about that opportunity. And that is why, if you look around, so many deals never hit the market. They're always traded before they even get there. It's because these brokers have buyers that they trust, that they're willing to introduce to the sellers, and they will go to bat for them. Because again, that buyer has a reputation for not retrading, for always closing, and for being as smooth of a buyer as possible. And so that makes a huge difference. Brokers want an easy job, right? Like I want to make 1-2 phone calls and get $100,000 commission. And sellers are willing to pay that because it's worth it to them too. And so, again, brokers want it as easy as possible. So they are going to reach out to their network, the guys that they know will buy, because they don't get paid unless those deals close. So, it's clearly having a good relationship with brokers is paramount. Have you ever found a deal without a broker?
No, I've never. Well, in the space that I operate in, even a 48 unit, a lot of people come into this space and they're, sending out the yellow mailers. They are cold calling people. In my space, that really doesn't work. I've only bought things that were publicly marketed. I've had a few deals that have been presented to me as an off-market kind of pocket deal, but everything I've ever bought has always gone through a broker, and it's actually been marketed to the entire world every time.
Yeah, it's not uncommon in commercial real estate either. I mean, once you get past a certain threshold, right? I mean, Bruce is dealing in the 150 plus unit apartment complex world. So those property owners are very sophisticated. They're going to go out and they're going to work with a broker because they know that that's how they're going to maximize the value for their property. In commercial real estate, and this is probably true too in multifamily, but we're talking sub 20 units, right? It's not uncommon to go out and find an off-market deal with no brokers involved. But you as the buyer then have to put in all of that work and effort. And think about it. I mean, you're not paying a broker to help you find a deal anyway. So why would you go through all of the effort to send out mailers, to make those cold calls, to go knock on doors, when you could just go build a good relationship with a broker and let them do that work? Because think about it. I mean, brokers are out there pounding the pavement, day in and day out to get the next deal, to get their next commission. So they're already doing all of that legwork for you. All you have to do is come in and be a good buyer. That's really it.
Right. And, I don't want to make people think that I would never buy anything without a broker. As long as you have strong legal representation, right? You have to have your own real estate attorney, even when you're buying a project from a brokered deal. Well, you still have to have your own real estate attorney, of course, to look over all the contracts to make sure everything's appropriate and in line and buttoned up. So, I had a guy reach out to me, and I talked about this prior, that, they were offering me $32 to $34 million for my deal. Well, if I decide to go with those folks, I told them that it'll probably be 2 years later, and I'll circle back because I want to hold it for another 2 years. But when that day does come, there's a chance that I would go straight back to them because I have my attorney. I have a very good real estate attorney that I've worked with for years now, that I have her in my corner. And so I would be willing to do it, but I've always bought from a brokered deal, but I would do it without one if it comes up. So I'm not saying that it can't work. It can, because let's say it's a $35 million deal, to make, more round number. And a broker is going at that level. I could probably get the deal brokered for 1 point. That's still $350,000. If I can sit there and sell it to somebody without the broker involved, it might be worth it for me. The broker is there to be an intermediary, really, to keep us from talking directly to each other, to make sure everything stays calm, cooler heads prevail, that kind of thing. But yeah, if I could buy, or if I could sell a deal, especially, and not have to pay that $350,000 commission, hell, I'll do that, if it comes up, because again, I do have a very strong real estate attorney on my team.
Yeah, and there are definitely circumstances where that makes more sense, right? Typically we recommend to sellers, like, get a broker involved and take it to market, get people fighting over the property, because that's probably how you're going to maximize your value, especially in a scenario with multifamily real estate where there's a whisper price, right? It's not hey, the price is $24 million. It's no, I think that it's going to trade for around this, but it's going to depend on where offers come in, right? So, there are certain scenarios absolutely where saving that $350,000 is worth it, especially if you've got a good relationship. Kind of like what you said earlier, Bruce, that you've got a buyer that's a good friend. Now, obviously, you still had a broker in that transaction, and I'm sure that really helped keep it arm's length, which that is sometimes worth the broker's fee in and of itself, because the brokers kind of serve as not only just an intermediary, but also a cool, calm, level-headed advisor that doesn't, is not necessarily getting emotional thinking, oh, you're taking it personally. Well, no, come on, it's not personal. It's just, maybe they just messed up their financials.
Right. So, and that's another important thing, right? Keep it professional always. This is a good friend of mine, but we know to keep friendship and business completely separate. We were texting all the time throughout the sales process, but never once did we talk about this deal, ever. We talked about all kinds of other things. How's the family? How's your business going? How are your kids? We talked about other things, about podcasts and stuff. And, I referred some people to him. He referred some people to me over that 3-month process. But we never once talked about the deal we were doing together. It always went through. So even if there's not a broker there, you still will have your attorney talk with his attorney or their attorney. So whatever the situation is or the structure of this deal, I don't think you should ever talk directly to the seller or the buyer. It's just usually not going to end well, especially if it's a friend. I don't want to get into weird stuff with my friend. I want to keep it completely professional, run everything through the broker or my attorney always. But, going back to that $350,000 thing, that's a big deal, right? By not having to use a broker. But to put more context into it, let's say it's your deal and you're the deal sponsor, and you just saved $350,000 when you sold this property. If you have a 20% promote, you personally will see an extra $70,000 in your pocket. That's huge. And on that deal, let's do this math. That made almost a 7% difference in profitability on the sale, because on that deal, I raised $5.2 million to get that deal. And that's $350,000 we just saved. So $350,000 divided by the total we invested, which was $5.2 million, that made a 6.7% difference in profitability when we sell. So it's a huge deal if you can eliminate those. But again, don't eliminate those just to save money. You have to have a good backup, have to have a good real estate attorney on your team. If you don't ever do anything to save a buck and take a dangerous business risk. It doesn't end well almost ever. So don't cut things just to cut things.
Yeah, and think about this too. I mean, you're going to have to answer to your investors. So how are you going to respond to the, do you think that we got the best price possible because you didn't use a broker? I mean, you've got to really be able to back that question up, right? I mean, you don't want them really suspecting like maybe we didn't get a good deal and, we should have taken it to market.
Well, that's a really good point, actually, that, so the way to kind of work through that, right? So we'll give some advice here. So let's say this really does start to materialize. What I would do as the seller, let's say they come to me and say, look, I'm going to give you $30 million for your property. Well, what I'm going to do is I'm going to first reach out to my trusted brokers. I've got about 3 of them that I really like here locally and say, I want a BOV, a broker's opinion of value. They'll do that for you for free because that's how they get listings. That I'm going to tell you how much I think I could get for that deal if you decide to list it with me. And I would be honest with them because I have such a good rapport and relationship with them that I would just tell them up front, look, I'm probably going to sell it without a broker involved because somebody came to me directly. I've done a lot of business with you. So would you do this for me they'll always do it as a favor to me. So I would reach out and, on this deal, I really think if it got brokered, it would sell for about $26 to $28 million. So if this outside group is willing to give me $30 to $35 million, it might be worth it, right? So that kind of speaks to your thought of your investors. Did you really get the highest price you possibly could have? If you would have listed it with a broker, you probably could have, had a feeding frenzy and a bidding war. Well, that's why I would reach out to some trusted brokers and say, give me your opinion of the value of this property if you listed it for me. And if I think I can do tremendously better than that by selling directly to this other person and save the commission in the process, it might be worth it. But again, do it safely, have a good real estate attorney.
Yeah, that's a little CYA that you should always be doing because you have a fiduciary responsibility to your investors, right? And so you should be able to tell them exactly why you feel that you got the best price possible for them.
Right.
You don't ever want that to come in question. So the broker's opinion of value brings up a good point. Are there any other ways that you utilize a broker whenever you're in the process? So maybe you're not necessarily buying something, but you're getting an opinion of value. Is there anything else that you call on brokers for?
Well, I'm just the basic stuff. I can't think of anything outside of the obvious, but, I'll ask them often, say, okay, look, I'm about ready to start my next search. Can you find me something like X? And, they'll be honest with me, say, look, dude, no, I can't find anything like that right now. So let's say I go to them and say, okay, I'm coming out. Because I polled my investor base, said, what do you need in a return right now? What I'm seeing in this market is a 6 to 7% return. Maybe it's a 5 to 6, whatever I'm seeing, I'm going to, express that to my investors, and they're going to tell me what they feel comfortable investing in. If they say, I'm only going to invest my money if I can get a 10% return, okay, I don't think I'm going to find that in today's market, but I go to the brokers now and say, look, what I need to find in this next deal is I'm going to throw some numbers out. Let's say I need a 15% IRR within 5 years. I need an average cash on cash return of 10 to 12%. And then they're going to tell me, well, dude, there's nothing like that in this market right now. It's a very overheated market, a very strong seller's market. So Bruce, you could tour all you want, but you're just not going to find anything like that. So I'm reaching out to them to find out, where the market is. I'm talking to them about, if I'm thinking about selling, what do you think the going cap rate is in the market that I'm in? And where do you think I need to get my NOI to? And so I'll ask them questions like that. I know what my NOI is. I know what the prevailing cap rate is. So I know what my opinion of value for that property is, but they're going to tell me the truth a lot of times that maybe I didn't see it that way. Because one thing that really does come into play, which I think is ridiculous, but it does. There are emotions involved. So let's say I have a property that the NOI is let's see. Let me do some real math here. On a project that I'm running right now. So let's say my NOI on an annual basis is 1.56 million, right? And I know that the going rate, the cap rates in the market for this property is a 4 cap, and it is for a C property in a D neighborhood. The cap rates in Austin right now are 4. So divide that by 4.
Wow.
So that makes my property worth $39 million when you do a mathematical exercise. Now, that is a 192 unit property. So that means the deal is worth that's valued at $203,000 a unit. Bruce, I know that's what the NOI calculation says it is worth. But I'm telling you right now, nothing in that submarket has ever sold for over $130,000 a door. So I don't care what the NOI says, the emotional pushback, nobody's going to give you $200,000 a door. That's the thing that I don't know, right? I don't know those kinds of things. I know what NOI divided by cap rate says the property should be worth on the open market, but they know the real answer. Yes, Bruce, you're right. In a 4 cap market, which is what we're in, that is what it should sell at. But nobody's going to give you that because it's such an outlier against the previous record in this market. Now, you can always set a record, but you're going to see an incremental record. You're not going to sell something that usually sells for 130 for 200. You might be able to sell for 135 or maybe even 140 a door. At the outside, maybe 150 a door, but nobody's going to go from a market that's selling at 130 and give you $205,000 a door. It's just not going to happen. But I don't know that without reaching out to these brokers.
Right. And I mean, again, you as the GP, the sponsor of the deal, you've got to go back and tell your investors why you think you should be setting a record price per door in that market. And you've got to be able to back that up. So that actually leads me to an interesting question. So, Bruce, obviously you and I are looking for a 200 plus unit apartment complex in Tennessee. We're willing to look pretty much anywhere, Nashville, Knoxville, Chattanooga, probably anywhere but Memphis, honestly. If I wasn't in Tennessee, how would you approach jumping into a new market and pitching yourself to brokers?
Well, okay, so that's really, really difficult for a newbie. That's where, again, keep belaboring the same points, but get somebody on your team, either as a mentor, coach, or somebody that will come into your GP with a huge track record, or at least a decent track record. Once you get to where I am now, and this is not patting myself on the back, there are a lot of people with a hell of a lot more experience than me, but I've developed somewhat of a name in my local markets. So what I'll do now is I'll reach out to my local contacts, and all the guys that I'm buying and selling with are national groups. So I'll reach out to Walker Dunlop. I'll reach out to the local guy for HFF or JLL and say, hey, I'm thinking about buying in Topeka, Kansas. Who do you know there? Do you have an office here? Yes, I do. Could you make an introduction for it? Absolutely. So they'll get on the phone and say, hey, look, this is Bruce Peterson. He's going to be looking in Topeka. I can vouch for him as being a very good buyer in the past. He's got his shit together. He closes. He doesn't retrade. I've built this reputation that now my local brokerage contacts are willing to put my name out there for other people because they're taking a risk. If they're referring me to another broker and it doesn't go well, they're going to look like an idiot and they're going to start to hurt their own reputation. So that's how I do it now. But again, if you've never bought a deal, you don't have your own track record, find somebody with a track record, preferably in the market you're trying to buy in. If not, at least somebody that has strong connections to some of the national players.
Yeah, that's a really good point. I mean, having that broker make the introduction can be a huge difference, right? Because it's a referral. It's somebody that is not you as the investor or developer that has had experience with you, recommending you to this other person. I think that's huge. We have groups out of state reach out to us directly. I mean, they find us online. They'll reach out to us and they'll send pitch decks. They'll sometimes send references. I think that the pitch decks can be pretty big, right? Because it'll show you all of their projects, and usually when those go in depth, I mean, you can tell whether somebody is actually closing deals or not, because we'll get those pitch decks, we'll go through them, and then I'll start Googling, who is this person, right? Because if they're actually closing deals, I can look up the property address and see, if there was a news article about that property trading and, what it traded for. And I can actually go in and third party verify who this group is. And so you've got to believe that brokers are definitely doing that on you. I mean, they are doing their due diligence on you.
Right. So do me a favor, because I think a lot of people that listen to us are newbies, or like me, they came out of retail or maybe out of the restaurant industry. They don't really know everything they're trying to learn. Can you explain to everybody what you mean by a pitch deck?
Yes. So a pitch deck is essentially kind of look at it like Shark Tank, right? Everybody that enters the tank is giving a pitch on who they are, what their product is, and what they're looking for, right? So like that's probably the best way to put it. Who are you? Who's on your team? What's your track record? What deals have you guys done? What are you looking for? What kind of deals are you on the hunt for, right? Because you could have a track record of 20 to 40 unit properties, but maybe you want to start looking at 80 to 120. And I need to know that. And then, what kind of returns are you looking for? And, that's really what we look for in a pitch deck is just who are you, what's your track record, and what are you looking for? I mean, that helps us significantly understand what's going on.
What's the best way to put that together? Do you usually recommend people do it in like a PowerPoint or just a document? How do you think is the best way to do that?
Yeah, I mean, PowerPoint is better than nothing, but you can always kind of tell when somebody has done something in PowerPoint because it just doesn't. I mean, I looked at a deck yesterday. I actually picked one up, and it was a relatively big developer, but they had their deck done in PowerPoint, and you could tell. And there were typos in it. And so immediately when I'm looking at that, I'm going, I don't know how seriously I'm taking this developer. Because one, if you're established and you take yourself seriously, you're probably going to hire a group to put together a 10-page pitch deck on you, or you'll have somebody internally do it. But, the best I've ever seen are the ones where they hire a group to put together a pitch deck because you have to sell people on why you are the best buyer. And I've got to be honest. I mean, there have been times where we've gotten a deck like that, and it'll make the difference between whether I go to the seller and say, these guys are pretty big, they're pretty serious or not. I mean, we're doing a deal right now. It's 13 acres here in East Nashville. It's $8.5 million piece of property. And we had a number of multifamily developers from around the Southeast that were looking at buying it. And almost every single phone call I had with the sellers, they wanted to know, who is this person? How much have they built? And what are your thoughts? And so for me as the broker, you've got to think, like we were talking about earlier, do everything you can to help me sell you, right? Like, because I don't work for you, but I do have to go in and have these conversations with the sellers of, I don't know what this group is going to do. I mean, they sent over a Word document with a list of deals that they've done compared to, actually look at this pitch deck. Like, here y'all flip through it and take a look at all their projects, but you could see like these guys are pretty serious about what they're doing. So it just, again, like Bruce was saying, be professional earlier. Take yourself seriously. I mean, this is a professional game.
That's exactly what I was about to say, that it shows that you do take this serious. This is a real business. You didn't just do this, in your home office on a dot matrix printer and,
Right.
So you actually know what you're doing. You're sophisticated. It's the credibility piece. It really is. So I've always built my own, right? So I've never used one of these outside firms, and maybe you don't know any specifically, but to help people, do you know of any of the firms that people have used to create pitch decks for them?
Actually, I don't. I've got an in-house graphics design guy, and so that's who puts together all of our offering memorandums, as well as any other pitch decks that we use. Honestly, before I had him, we used Canva, Canva.com. That is an online little digital graphics platform. I mean, it's incredibly simple. They actually have pitch deck templates in there that are free. And you can go in and it will make you look professional. You're just going to have to spend a couple of hours on that, which you should anyway. Go in there and really craft your message. Put your branding into it. Have high quality pictures. I did one through Canva for my media kit. And every time, and I just did it myself. And, I'm not a graphics design guy, but every time I send that media kit out, people are like, wow, that was incredible. Like, who did that for you? I'm like, oh, it's just a template through Canva. You can go in there and change the colors and add pictures and text. And so that's probably a really good way for you to start inexpensively. Just go into Canva and put your own deck together.
Yeah, I like that. I use Canva for quite a bit of stuff. I even use Canva for doing social media posts. Canva is pretty
Yeah.
cool. But okay, so let's talk about that too. You're talking about credibility now and working with brokers and being taken seriously. If you're going to do this, take it seriously. Treat it like a business. Get a high quality business card. Do not hand me a business card and expect me to take your ass seriously when it has perforated edges. That tells me you printed it at your home because you're cheap as hell. I almost said the F word. You're cheap as crap, right? So don't do that. Take this serious. Yes, it is an investment of money. It might cost you $50 to $100 to get a good business card made, 250 to 500 business cards. Spend that little bit of money. If you're not willing to do that stuff, why the hell are you doing this in the first place? If you can't, now I know some of this takes some money, and maybe we don't have a lot of money at the beginning. Come up with a name for your company. Come up with a logo or a brand design. Mine's cheesy. I'm the apartment guy. I've got a little caricature of my face, but it's memorable. People remember me. I spent some money on that, but it was important for me. I'm building a business and I'm trying to build a personal brand, because if you're a syndicator, you're in the business of raising money. The more sophisticated and professional and together you can make yourself appear, not just to brokers, but to potential investors, the more likely you are to be taken seriously and people will be willing to give you their money. So again, I think you should have a brand name. You should have a logo if you can afford it. And maybe you can build it your own on Canva or something like that. I don't know how to do it myself. So I had to hire an outside graphics guy to do it for me. He did a fantastic job. But again, take yourself seriously, put some money, time, thought, and effort into this. And again, if you're not willing to do that, just go invest in somebody else's thing. There's nothing wrong with that. And there's nothing wrong with you not wanting to take the time to do it. But I think you're handicapping yourself at every turn.
And look, one day, once you've gotten enough knowledge like Bruce and you've done enough deals, you can have the ultimate business card, a book on syndication.
Well, you wrote a book before I did, dude. But yeah, the book, everybody has a book in them. I firmly believe that. I think everybody should write a book, even if you don't want to start a business or, be a syndicator. Writing a book, as hyperbolic as this sounds, it changes your life. It really and truly changes your life in ways you just had no way of knowing. I'm a college dropout. I've been written about in Forbes, Entrepreneur, on the Motley Fool. This shit would not have happened had I not written a book. So you're right. Write a book. It's a big deal. It's not for everybody. Maybe you don't want to write a book, but I think everybody has a book in them, and you'd be amazed at the difference in your life that book can make.
Yeah, I mean, the book was the best business card we've ever had. I mean, you can see it right there. I mean, when I wrote the book, Open for Business, the Insider's Guide to Leasing Commercial Real Estate. Yeah, Bruce has a whole bunch behind him as well.
I can't figure out
when I wrote that, do what?
No, nothing. Go ahead.
No, when I wrote the book, I mean, it changed things, right? Like it immediately established me as an expert on that side of commercial real estate, on leasing commercial real estate. It immediately established Bruce as an expert on syndicating multifamily. I mean, it really is the best business card you could ever have, because I'll go and sit down in meetings with landlords and I'll give them a book. And they're like, wow, you wrote a book on leasing commercial real estate? And I said, absolutely. I mean, think about how much I know. Think about how much we'll be able to help you. I mean, we can really do it. And I may or may not be the most knowledgeable person in the world on leasing commercial real estate, but that's what clients will see.
Right. So let's dig a little deeper there, right? I think everybody's got a book in them. If you don't know what you're talking about, don't write a book on it. Don't try to be someone you're not and build credibility when you don't know what the hell you're talking about. I've seen people do that. Don't write the book yourself if you don't know how to write a damn book. I don't know how to write a book. It was expensive as hell. I'll be honest. It probably, some people don't like when I talk numbers, but I'm just a completely open book. I spent $50,000 to have somebody else write a book for me. But it was that important in my life and in my business. That's a hell of that's an enormous financial investment. but I don't know how. It goes back to printing the business card on your home computer with perforated edges. It's the same thing. I could have written my own book and figured out how to publish it with Amazon, self-publishing stuff, but it would have been crap and it would have backfired. So I wrote a book because it's going to build. Well, no, all it did was tear down my credibility because it shows how big a moron I am, that I don't know what I'm doing. If I don't know how to spell, if I don't know punctuation, if I don't know structure, chapter layout, all this stuff, find somebody else to help you do it. And again, if you don't know your subject matter, don't go write about it because you're going to get exposed very, very quickly. Establish yourself, learn your craft, spend that 10,000 hours that everybody talks about to master your craft or get really, really, really good at it. Then go write a book. It's dangerous sometimes if we say, oh, go write a book, go start a podcast. If it's not your thing, if you're not good at it, if you don't know your subject matter, it'll only backfire. So don't everybody go write a book if you're not ready to write the book. But I think everybody has a book in them of some sort right now, though.
Well, and that all comes back to building credibility with brokers. I mean, now Bruce can tell brokers that he's never met before, like, yes, I have syndicated, millions and millions of dollars of equity. We currently own about 1,100 units. I wrote a book on syndication. Actually, here's a copy for you. And that gives that broker a lot of ammo to go back to the seller and say, look, I mean, this guy, he's got a pretty good audience, and I think that he can raise the capital, and he's done it before. So, Bruce, do you have any? What are some of your conclusive notes on working with brokers as we wrap up today?
Well, so, just to recap it, then I guess take it seriously, be professional, don't be a tightwad, don't try to get over on people, don't be shady, be as easy to get along with as you can, and let the seller think that he won. It's a way to get additional deals. Don't take it personal. Don't get into a pissing match. Now, it'll never be a face-to-face pissing match if you do this right. It's always going to go through a broker or through your attorneys, but still, don't take it personal. Don't get into those pissing matches because, again, if they think they got over on you, they'll send you the next deal. But don't let them get over on you to the point where the deal doesn't make sense anymore. So be agreeable, be professional, do what you say you're going to do, and don't retrade if you can ever help it.
Yep. I'd say go on property tours, give those brokers feedback, and be sure to follow up with them. Think about it. They have so many investors reaching out to them on a day-to-day basis that are asking to get on their list. They're asking for the next deal. The ones that end up getting the deals are the ones that follow up. They text me, they email me, they send a gift to the office every now and then. Because they stay top of mind. So whenever I come across a deal, they are the ones I call. So that is it for working with commercial and multifamily real estate brokers. I hope that Bruce and I gave you some pretty good ammo to go out there and start building your track record with brokers in the area that you want to be in. And guys, we will see you next week.
Later.